No, but...
All right, we're going to go and start YouTube.
It's from The Plague.
Yeah, it is. I really need to watch that movie again. It's great.
I'm giving thanks that it's not a plague right now.
Favorite movie, one of them.
What, The
He
Plague?
watched it a lot. No, Monty Python.
You have to find a strawberry.
And he would watch...
Is Monty Python one movie or a series of movies?
It's a couple of different movies. They also had
It's
TV
they're
series.
like the group that makes the movies.
Right.
Okay.
All right, so
Are we
we're
on
live
YouTube already? Yeah, people are really enjoying this conversation. Welcome, YouTube!
Happy Thanksgiving!
Happy Thanksgiving. Here we are, getting ready to launch on the Facebook. As soon as it's live, we will try to get better. What do we got here, Rhoda? Let's have some chit-chat while we're waiting for the Facebook. 5, 4, 3. Hello, world. Welcome back to another episode
Happy Thanksgiving, Russia!
Finance Agents Live, episode number 68.
Just one more to go.
No, we got a lot more to go. We're not giving up. We've been doing this for, a little over since last August. Show 68. It's a good show. You're excited about 69, apparently. We have some props today. The first one you might notice is the weird hat that Rhoda has on.
Not weird.
It is shaped like a chicken, right?
Turkey. Stop it.
All right. Thanksgiving episode. Thanksgiving tomorrow. Happy Thanksgiving to everybody. We wanted to go into Thanksgiving with a real positive theme of why can't I get a business loan?
I had a story.
You had a story. There's a story?
Well, no, but not about business loans, but...
Is it quick?
Quick. So one time, I used to live in Europe. I didn't tell you this story.
Uh-huh. Okay.
And one time, I wanted to share Thanksgiving with a bunch of Europeans, and they were really excited. And I went, and they ordered the turkey for me.
Mm-hmm.
And I said, it has to be one piece. I don't want them to cut it up in pieces.
Not turkey cutlets.
No, not turkey cutlets. So I knew they were going to mess it up. I knew it. And so we went to the butcher, and then my boyfriend comes out, and he's like, uh-oh. And I was like, from his face, I was like, they cut the bird up. And it was like a 40-pound bird. We had to cut it anyway because it wouldn't fit in the oven.
Oh, so it was not cut. So it was a 40-pound turkey. And you couldn't fit it in your small European oven. Okay, that's interesting.
What just made me think about this guy?
So is it this big? Was it bigger than this?
Way bigger. It was a huge bird.
Wow, 40 pounds. That's pretty big.
That was my small chit-chat when you said, let's have chit-chat.
Yeah, there it is. I hope you guys all have 40-pound turkeys this year and not the ones that were recalled for salmonella or something.
Oh, no.
That was lettuce.
Don't, the big thing is the tiny turkey this year.
90,000
Getting the
pounds of
tiny
turkey.
turkey.
Right. Okay.
If you cook it properly, does it still have salmonella?
I don't know. We'll leave that to the scientists. But 90,000 pounds of turkey were recalled, so I'm not just making that. They wouldn't recall it if you're going to. Anyway, okay. So 2 weeks ago, we did a show. Lorretta Leggett, I'm hoping I got the name right, asked after the show in the show notes, why can't I get a business loan? And I thought, hey, that'd be a great show. So if you're watching this and you got some questions you think would make for a great show, after the show, put it in the questions below, and you could end up famous like Loretta and end up being show number 70, 71. Come back next
69.
Week.
That's
not 69 is already reserved for the F word. Foreclosures. Show 69. Foreclosures. I'm going to be joined by Carla J., who manages our foreclosures. She works at the company that handles our CRE foreclosures. We're going to be talking about that. What happens, what's the process, and what are the opportunities that come out of that? How do you avoid it? How do you benefit from it? All that. But for this week, let's get into why can't I get a business loan? We're going to be going over the 5 main things that are important for a traditional business loan, which is what most people mean when they ask this question. We're going to go through one at a time and talk about why you can't get a business loan if that's a problem. But then we're going to give thanks for all the awesome alternatives that are available. We're going to go through each one and just do a rapid run through on bing, 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 bing. If this is your problem, this is what's available. So we'll start with a Debbie Downer and we end up with lots of Debbie Uppers, right?
thankfulness.
Thankfulness. We're going to be thankful for all the awesome stuff.
Greatest joy, greatest sorrow.
That's our greatest joy, is helping you find a way around your problems. Solutions for your problems. All right. So number one, what is the first primary number one reason why somebody can't get a business loan? Rhoda?
The first C of the 5 C's is capital or cash.
Yeah, right. You don't have cash, so you need a loan. Makes sense, right? You go to the bank, say, hey, I don't got money. I need more. Can I get some? They say, No. Why? What? They don't want to give you a loan if you don't have money. Isn't that the point? I need a loan.
Yeah, Bob Hope
That's what
said
the bank's for.
bank will lend you money if you can prove you don't need it, right? Isn't that Bob Hope's catchphrase or something?
This is just a joke. They don't really mean it, right? Yeah, they really mean it. Right? If you go to the bank and you don't have money, they're not giving you money. It sounds silly. If you want a loan because you need money, you got to show that you don't need it. All right, so let's go through the alternatives. If you got turned down for a loan, let's start with, we're doing these alphabetically, BDRA. If you don't have money, can you get a BDRA? That's a retirement rollover.
Well, BDRA is you have money. It's just tied up in your retirement.
In a retirement account. It's not my account. It's in my retirement account. I can't touch my retirement account, right?
Right, but you do sort of have money and assets, so then we help you roll it over, so you can get it.
Okay, so you have money in a retirement account. You can get access for the business. Next, for BTL, that's business term loans like SBA loans. If I have money in a retirement account, do they count that as me having money? Does that mean I can't get a loan?
You can use it to roll over. If you're going to quit your job, you can use that as part of the 10% injection requirement for...
But you have to roll it over before they count it. So whatever comes over, how much money do I need to get a business term loan?
For startups, you need 10% injection. After
What do you call it, an injection? What's that? What does that mean?
I didn't invent the
You need a 10% injection.
I didn't invent that.
That sounds funny.
Okay. So sometimes you inject your turkey with the Cajun seasonings.
Well, you got to go and tell them what your project costs are, and you have to have 10% of it. So if you say I need a loan for $100,000 because you already put in 50, they count the money you already put in, right?
Yeah. Yep,
so you'd say, all right, you got your 50% injection.
Where you see that a lot is particularly with people who are going to start a franchise and they have to pay their franchise fee, and that can count towards the injection requirement. Sometimes people are doing build-outs and for a second location, and they have to pay an architect or something like that, and you can count that towards injection of the second location requirement.
If I've been paying money into this business, how far back will they count that as injection money?
So really, for term loan startups are considered anything under 2 years, and they're going to want to make sure that you have that.
I can use money I paid over the last 2 years as my 10%.
There is a limit or like a threshold that you have to meet. I think it has to be over like $500 or $750, something like that, in order to count towards the injection requirement. I don't remember right off the top of my head.
So going to lunch with my business partner as a business expense doesn't count towards capital injection?
Or if you buy a ream of paper for your, you know what I mean, that doesn't count. But if you have larger costs, if you buy the liquor license for your new liquor store, your restaurant, that's often a very big cost, and that can go towards the injection requirement. Or if you have escrow and you need to put something towards your escrow, then you can count that.
All right, so if you're looking to buy a business, is it 10% down? I can finance 90% of a business acquisition. Does that sound normal? That sounds like about the maximum. They're going to ask 10%. For more money.
They could,
frequently, right?
But 10% is the minimum.
10% is the minimum.
Regulations on that changed. It used to be 20%
that's
injection requirement, but that has changed. It's now 10.
Cool. All right. So you need your capital injection or your money down or you're already spent, plus reserves to cover payments for some period of time. How much time do you need to be able to cover payments for?
If it's a startup, you'll need to cover your living expenses, or they're going to want to see that you at least have outside income to cover your personal debt expenses. If you are a business that's over 2 years old,
living expenses?
Usually 3 to 6 months they'll want to see, because they don't want to take your last dollar. They want to see that you have money to
They don't want to
support
take my last
yourself.
dollar yet until I'm repaying the loan. Then they want my last dollar.
Even then.
No, they definitely want my last dollar.
They'll work with you. Our lenders work with you.
Depends on the lender.
Well, I was just working with someone about that, and they were having some problems. And I do want to say this: if you have an SBA and you're struggling to make those payments, don't dodge the bank's calls, because we did have a borrower who was dodging calls, and they were ready to put the, they couldn't get a hold of her, and so they were going to call the loan was in default. And I had to talk to her. I was like, you got to call them. So they were able to kind of restructure that, put them on a few interest-only payments for a few months while the business got back up on its feet. But answer the phone.
Okay, all right. So BTL is really, you need the most of this stuff. You need the most money. 10% is actually less than I was used to. What about if I want a real estate loan? I want a hard money real estate loan based on the asset. How much cash do I need?
Zero. You just need the asset.
Almost zero.
Almost zero. You got to pay for the appraisal. You got to pay like your loan doc fee. We've gone through this in the past couple shows.
Yeah, a few grand at least.
You have a few grand.
But a few grand for $1 million is basically nothing. What about equipment?
Did you just say Hugh Grant?
Yes, Hugh Grant. You need Hugh Grant.
Hey.
Or a few grand. Better to have a few grand. Oh. Anyway, equipment. How much money to... Yeah, here's that. Equipment. How much money do I need if I want money for equipment?
This depends on another C, but it depends on your credit. Generally speaking, first or last month. It depends on your time in business and your credit, but you'll need first and last months plus some doc fees. If your credit is a little bit down, you'll need up to 50% to buy the equipment.
All right, so we're talking about a lease, like a 3-year lease. You got to pay the first and last payment in advance. That's really, and some lenders will want more if you got bad credit, but it's not that much.
What about fix and flip?
Fix and flip.
It's your turn in the hot seat.
Okay, whew. All right, I don't know if I can take it. All right, fix and flip. Actually, we've seen some changes to this recently because the market is starting to top out, or at least some people think, and that's another point we're going to go into later. Fix and flip, you're going to need at least 10% of the purchase price and at least 10% of the rehab costs. But when I say at least, remember when I say we're talking about the maximums, don't expect you're always going to get the maximum. We're seeing it pulled back a lot recently to you need 15% or 20% down and 15 to 20% of the rehab costs. There's an exception. There's some people that will actually partner with you that put in all the money, but then they're going to take a bunch of the profits afterwards. So there's trade-offs there. There are options for people with no money at all. But in general, 10 to 20% of all costs you need to have in advance. One of the things with fix and flip that's interesting, some people hear 10 and 10, 10% of the purchase, 10% of the rehab, and they think that those costs are going to be spread out over time. You need all that up front. So let's say it's a $100,000 purchase and a $100,000 rehab. You need $10,000 for the purchase and the first $10,000 of rehab costs. You need 20 grand up front plus about 6 months payment. You got to have that all up front. So don't expect that the rehab costs are going to be spread over time. You're going to make the first expense, you're going to first payments on the rehab, and then they're going to compensate you and give you all future ones. But you got to have your money up front. What about factoring? How much money do I need in the bank if I want to get factoring?
You don't need money in the bank. You need people who owe you money, and it's other businesses, not consumers. That's what you need.
All right, I got people that are going to say they're going to pay me money. I just need them to write it down on paper. I'll give it away, and they'll give you some cash.
You need your AR, right. What about land? What do you need for land?
Land, well, if you're looking to buy land, you need like half of the money because financing for land is really tough. Maybe more, right? Depending on how rural or remote. Maybe you're just not even going to get it at all. Land purchases are a little tricky. If you've got land that you're owning free and clear and you want to pull some money out to do something else, that's also really tough. If you've got land free and clear and you want money for construction on top of it, then you're going to have money towards the construction. They may only give you credit for a certain portion of the land. Land is the most volatile asset. You're also going to need to be able to pay for appraisal, doc fees, and all that in advance. But just know that land is speculative. You're not going to get everything. What about for a personal term loan? If I want to go get a personal term loan, shows up on my credit, I can use it for whatever the heck I want. How much cash do I need in the bank?
In the bank is not really a requirement. We just need to see your last 3 months of pay stubs and a W-2. Do you need both, or you just need the 3 months of pay stubs to prove income?
Depends on the lender.
Okay.
Always need the pay stubs, always. Sometimes they're going to ask for all sorts of other junk. Just depends on how your credit is, how easy it is for you to get through it. But they're always going to look and see how much you've been paying. So they don't need it in the bank. They need it coming into the bank.
And I have done a call on one of these, part of our research we do. We talk to lenders, and he was asking me how much do I have in like my retirement assets, how much do I have in the bank. So it is stated income, but they do want to see how much, they want to understand your cash flow.
So you got to tell them you got money in the bank.
Right.
And show them that it goes in sometimes.
I mean, maybe they would ask for verification of what you said on the phone. I don't know, but they definitely asked how much cash do I have.
Stated income can be great for business owners, especially small business owners who are doing some magic to make sure they're not hitting a lot of taxes. I'm not going to say what that magic is, but sometimes it's hard to verify your income. You're getting a lot of cash payments. Anyway, you got to have that job coming in. So if you're a small business owner, you're not paying yourself W-2, it's going to be tough. You need W-2 income. Okay, revenue-based advances. How much cash do I need in the bank for a revenue-based advance?
Well, you need probably a $1,000 average daily balance. You need about $1,000 with deposits of $10,000, but
Deposits over a month
yes,
of $10,000
$10,000.
and at least $1,000 average in the bank.
in the bank,
And hopefully enough so that you're not bouncing checks all the time.
right? Maybe 5. That would be the max you could do, 5 to 7.
But that's it. You
That's
don't
it.
have to have a bunch of assets, collateral, all that.
You don't have to pay money up front to get a cash advance, I
Nope.
guess is also key. You don't have to pay, doc fees or a bunch of other fees up front out of pocket. It may come out of the funded amount, but nothing up front.
Okay, last but not least, we got our credit card program. You need to have good credit, no cash. No cash needed at all. All right, let's move on to the next thing. Collateral. All right, so we went over cash. Next is collateral. What do you need
Second C.
collateral for? If I don't have collateral, then I can't get a loan. What are the exceptions? Let's run through them real quick.
BDRA, it's just your retirement account. Nothing needed.
Yeah, it's not collateral. They just want to get the actual money
Right,
and give it to you.
right.
Business term loans, you got to have some collateral for that, right?
So they like it. Lenders like it.
They love it.
Particularly with startups, they're going to want to put a lien on your house and secure it somehow.
They're going to secure everything you got. But if you
Yes.
don't got it,
Well, so if you don't got it and you have an existing business and it's under $350,000, I have worked with borrowers who did not want to put a lien on their home, but that's definitely the exception that the bank was willing to do that, but not the norm. Anything over $350,000, the SBA regulations require that a lien goes on any and all collateral.
yeah, that can get tricky. So if you're in the process of getting a loan and you want to sell your home, that'll kill the loan because the home is your collateral. One workaround we've done in the past is when you sell the home, the money goes into an escrow and then it gets put back into another home that then they place another lien on. So there are ways around that. What about for real estate loans? I've got a hard money real estate loan. Do I need collateral for that?
Yes, by definition, yes.
That is the whole point of the dang loan, man. Generally, you want 2-to-1 collateral. You've got $1 million property, you can get $500,000 loan, more or less. So definitely for CRE. What about equipment? No collateral on equipment, right?
Except the equipment.
Ah, the equipment
The
is collateral.
equipment. The equipment.
So if it's a $100,000 lease for $100,000 in equipment, so that's just sort of a 1-to-1 collateral?
Yeah, it can be. It depends on credit, and that goes back to what we were talking about earlier, that sometimes some lenders will go over, or they'll require more collateral, so it'll be 2-to-1, so you'll require 50% down, but that's with people with really low credit. But it is possible to work that out.
I saw someone with great credit, and they required them to put on a house that was worth 3 times the value of the collateral. That's because it was a startup. So it really depends on the lender. If you're a startup, they're going to be extra careful. Fix and flip. The property is the collateral. So you don't need outside collateral. They'll never ask for additional. Factoring, what kind of collateral do you have, Rhodes?
So they're going to put a lien on your AR and a lien on the business and set up a lockbox so that all of your deposits start going into that other account. But that's really the collateral. I haven't seen them put a lien on or secure it with personal assets or anything like that, just business assets.
They're going to go all the people that owe you money and say, hey, pay us instead. Sounds like the mafia. But anyway, that's how it works. What about land purchase? Do you need collateral for the land?
The land, and it's usually 2-to-1
Or more.
often more,
Maybe
3
4-to-1.
or 4-to-1. Yes,
Right.
That's
They may
norm.
cross-collateralize other properties in order to get the deal done because, again, lenders are a little iffy on land. Right now, a lot of lenders are starting to say no. Personal term loans, how much collateral you need for that?
Your job, not really a lot of,
Just the job, just your
Collateral.
paycheck.
just your paycheck.
Revenue-based advance, so I got to give a lot of collateral for the business?
No, I wouldn't say it's collateral, but they will often put a UCC on it, and what we're seeing now that's common is a confession of judgment, which isn't collateral per se, but it is definitely something that you're giving up, is that you sign that confession of judgment.
Like a pending threat that they
Right.
hold over your head. They
Which,
say, hey,
you
you're already
know,
guilty.
Yeah.
Just tell us you're guilty and we'll give you the money.
Right, and so that's sort of a type of collateral.
Sure.
Right.
Is that extortion? Anyway, in the last program we have credit cards. They're going to hold your credit as collateral because if you default, then they're going to beat the heck out of your credit. But everybody does that anyway. So, all right, speaking of credit, that's the next section. All right, so we went over cash, collateral. Now we're going to talk about credit and character.
Slash character.
Depends on who you talk to.
Right.
What's the difference between credit and character?
I think
You're a
character
character.
is sort of
You're a character,
one
right?
of those jokes coming out like last time.
You ring a bell for the joke? What are we
I
doing?
forgot to bring my drum set. I would have played you out on the bat.
All right, awesome. Credit, collateral. What's the difference between the two?
Credit and character?
Yeah.
Whatever.
Whatever.
He's the sauce.
Yeah, that whole half a drink has hit me. All right.
So
Credit,
I think character
character.
is the bigger box, right? All squares are rectangles, but not all rectangles are squares. That's a good analogy, right? So character is broader, and it includes your background. It includes any experience you have. It includes your education, things like that. So it's broader. It's your whole resume.
Education.
Credit
okay.
is more narrow, and it includes just how you pay people back, any liens or judgments that you might have, bankruptcies, things like that.
Credit is your credit report. Character is, have you been to college? Have you been to jail?
Right.
All right. All right. So if you want to get a BDRA and you've been to jail, maybe you're in jail right now. Does it matter? Can you do it?
I think so.
You can roll that puppy over. Roll over those funds.
Because you're not currently employed if you're in jail, probably. So
Yep.
there you go.
You're not
That is
working
one of the
anywhere.
criteria.
Maybe 25 cents an hour making shirts. Yeah, so BDRA doesn't matter about your
Did you get a W-2 when you were in
credit.
jail?
I don't know.
You brought it up.
Doesn't matter about your credit or character. You could do it. Business term loans. They don't care about that either, right?
They do care about that.
Little bit.
A lot.
Or maybe a lot.
Or maybe a lot.
All right, so credit matters.
Credit matters, and that's why I bring in characters, because they're going to want to see your experience and education. If you're, moving on to a bigger, sometimes you can mitigate your experience in an industry with education. We worked with an attorney
bringing in a partner.
once, right? We worked with an attorney once who was opening a tutoring center, and even though she didn't have any direct tutoring experience, she had a lot of education that they figured overcompensated for the lack of tutoring experience.
Right. Okay, so if you got bad credit and bad character, and you want to do a real estate loan, can you do that?
I think so.
Yep. We don't care about any of that.
It says nope on the screen.
Nope, it doesn't matter, meaning go for it, right? Really, we don't care, right? As long as the collateral is in the asset. How about equipment? How much do they care about equipment, credit for equipment?
So they care about it again. As I've said, maybe this is the third time. It will help.
Because it's the third topic.
It's the third topic, so it's all the same. Hope it's really driving this home. Depending on your credit, it will impact how much money you need to put down, also your time in business and your revenues. But credit, you can play with a lot in equipment.
Whoa!
That went my turkey.
Okay.
One
Get this
time my brother.
out of the firing zone here. All right. Fix and flip. What's the credit needed for that?
600, but really 680.
Yeah, it used
So
to be
it's kinda
600,
like-
but they're pulling back, right? If you want to get that 90 and 90, you got to be 680 plus with experience. Let's put that in the character box. If you've done a lot of flips before, let's say you have better character or experience, you're more likely to get the higher loan amounts.
With lower credit.
Yeah, exactly.
Great.
Factor. Is credit a factor in
So
factoring?
you're gonna say-
Yeah, I'm going to start the accents now. This is dragging it. Is credit a factor for factoring? Go.
You should see Darren.
All right, you're shutting down.
Lifted this camera to Darren, though. He's like, this is...
Okay.
No, it's not. It's not a factor for factoring.
All right. Land. Who cares about credit? Do they care about credit if you want to buy land or get cash out of land?
It depends on the lender and how much they'll give you, but yeah, it does impact your ability to
You know,
pull
land
it out.
is tough enough, guys. Give me what you got. Please, have some good credit or something. Personal term loans. Credit?
Yes.
Yes, you need it to be good. The only thing they're looking at is your income and your credit. If one of those two is bad, you are out.
What about RBAs?
You know what? You can have pretty dang low credit with an RBA. RBA is the working capital loans, the daily payment ones. If you have a merchant account, they don't even pull your credit, so it could be really bad. But if you're doing it from your bank accounts, which most of the lenders do in these days, you need 500, which is, again, pretty low. So it's a pretty low hurdle. The higher it is, though, the better rates and terms you're going to get. So more is more. And UBF.
Yes. It's a credit-based program.
It is the only thing they're looking at. And if your credit is wonky, then You're not having it. Okay, moving on. Next category, capacity cash flow. What's that mean? Capacity cash flow.
The ability to repay the debt. So that's what they're looking at here. And so BDRA, because it's a retirement, you have to repay it over a certain amount of time, or how does that work with them?
They don't ask for any verification that you're going to be able to repay this stuff. Effectively, you are investing in a business. There's no way to know what's going to happen with that business. They don't even try. So, boom. If you got the money, you could roll it over. Are you noticing a theme with BDRA?
It's the easiest.
They don't really care about anything. If you got the money in your dang 401k and you're not working at the company anymore, you can roll it over as long as you're using it for a business. Boom, period. Business term loans. What are we talking about? Cash flow? Yeah.
Cash flow, right. So for an existing business or for your projections, they're going to want to have you have that debt service ratio for $1 or 125. So for every dollar you borrow, they want to see you earning $1.25.
By earning, they mean leftover money after you pay for everything. So if you got $100,000 coming in each month and you have $80,000 in expenses each month, and believe me, they're going to verify all this stuff, they'll say you have $20,000 left. That $20,000 needs to be at least 1.25 or 1.5, sometimes 2, it depends on the lender, times the amount of your monthly loan payments. So if your loan payment was $15,000 and you have $20,000, you'd be good, right?
Sounds about right.
I get people all the time saying, hey, I want to get $1 million loan, and we look and they have like $2,000 of net revenue each month, and they're going to look at your business and personal. There's no way to game it. You got to be doing well. That's what I mean. You got to have money to get money. CRE. What do they care about your cash flow on the hard money real estate, non-QM lending?
Not really, unless it's like they want to see you're generating income if it's a parking lot or something more obscure, but generally speaking, it's not an issue. Like cemetery, something like this.
Yeah, there's cash flow in a cemetery, if you can believe it.
There is.
Most of the time, we're not going to ask for verification of revenues unless it's real marginal or something weird like a cemetery or whatever. There are some times when you can get a greater valuation for your property based on the cash flow method as opposed to the market method. But most of the time, we're going to go by the market method, so the cash flow is superfluous. We had somebody come in with a Piggly Wiggly, in air quotes, that was bringing in $25,000 a month, air quotes again, and so based on that valuation, the building should have been worth $4 million. We gave it the best, $1.6 million. Unfortunately, it didn't work like that because cash flow is not the king in this case. Equipment.
Equipment depends on, if you're a startup, they're going to be looking at the overall industry trends and your personal banks more. But it's not a direct income analysis as strict as a term loan.
All right. They care about you bringing in money, but they care more about the equipment, the collateral, and who the heck you are. Fix and flip. How many years of tax returns with net profits do you have to provide for a fix and flip?
That is not my program, so I'm going to let you do that.
They don't care about income. They're just looking at the property. They want to see that the property is a good property where once you put some money into it, it's going to be worth a lot more. Factoring.
Factoring. It's important, but the age matters, depends on how much you can get. So you get a different amount based on AR that's 30 days old versus 60 days old versus 90 days old, and get very little credit for AR that's over 120 days old. So yeah, it definitely matters.
So remember, factoring is they say, oh, you're bringing in this much a month, and look how much more they owe you. These people are paying you. That's your cash flow. We're going to give you an advance on your future cash flow. So cash flow is really the thing that matters. Plus, who's paying you? If it's shady people they don't like, they're not going to. It's not going to count. But if it's the government, depending on the economy,
right,
then they're going to give that a lot of credit.
Right.
All right, land. How much cash flow do you need for a land purchase or a land cash out?
No, that's not really what they're working at for land. They want to look at how much, particularly if you're going to use that money to invest in the land and improve the value or increase the value of it. So what you're going to do or use of funds is usually pretty important there, but actual cash flow on a raw piece of land is not. Okay,
personal term loan. You need cash flow for that?
Well, you got to have your income. So
income,
yeah,
baby. It's got to be coming.
Important.
RBA, revenue-based advance, cash flow. Do they care?
It's all about the cash flow on that one.
All about the cash.
They really want to see you having deposits and cash flowing in. Your average daily balance usually needs to be about 10% of those deposits so that they can even see what your net income is.
Right, so if your business is not that good, you got bad credit, you have no assets, but you have cash flow, RBA is your home. UBF, credit card program. If you want to get credit cards, how much cash flow do you need for that?
None.
Nada.
Nada.
You just got to have some good credit.
Good credit.
All right, let's roll into this last one here, conditions.
Conditions.
What does that mean, conditions? Condition of what?
Market conditions, industry conditions, the conditions of the loan.
The conditions of the loan. Okay, so based on the market, they're saying, so if it's a good news day or a bad news day, some lenders are going to say no. All right, let's start with the BDRA. You want to roll over those retirement funds? Not if the economy's dropping, or does it matter?
Well, you know, if your retirement assets are in the stock market and the stock market tanks, you'll get whatever the stocks are worth that day, but you'll still get your money.
Get it out fast before it drops any further.
Or leave it in there and ride it out, but yeah, that would be...
It could be a long ride sometimes.
It could be, for
Ride
sure.
or die. Ride
Get the
or
money
die.
out, invest it in earn11.com, earn 11% fixed return, investing in real estate assets. Start, quick plug. Burp. All right, BTL, do they care? These guys don't care about the market. If it's
Yeah.
up or down, whenever Trump talks, does it somebody get their loan turned down because Trump talked to North Korea again?
Well, one of the things I like to point out on this one is that the industry, like, I don't really see lenders lending to bookstores or something where the entire industry is kind of going down or even exiting. And I think, you know, we've had a drop in the stock market, so that may cause lenders to tighten up. But yeah, they read the news, they know what's going on, and they try and see how the economy overall is going to be doing.
All right, so bookstores, you're talking about an industry-specific condition. National conditions matter as well. When I say when Trump speaks, it's actually not as relevant. But if the stock market reacts, that could be a market. If they start to see a downward trend, the banks are going to start pulling back. Trends are often in a bunch of different industries. Some industries aren't affected and some are. So depending on your industry, you could have some real pullback. For example, think about oil and gas. The oil and gas industry has had a lot of trouble over the last 6 years while it was booming for time before that. So that's a very good example of an industry-specific pullback that's going to affect your loan if you're in the industry. CRE, if you want to get a hard money loan and the economy is bad, do they care?
Well, it'll impact your appraisal, so that will likely impact how much money you can get, but those ratios are still going to be there to protect the investment and the loan.
The number one thing we care about on the hard money loans is the asset, but that asset is affected by the local market. We care about what we can sell that thing for, and if you are in an area that is being affected, like speaking of oil and gas, the Louisiana area had a lot of oil and gas and it depleted real estate prices, and we wouldn't do real estate loans there for a while. So it is a factor because it affects the value of your assets. What about equipment?
Same, you've brought it up a couple times with oil and gas. Another industry that is, or the conditions of the industry would be transportation and logistics. That's a hard one to get through, particularly for startups. They want to see you having a couple trucks and the overall condition of your business.
Transportation's always bad. It's not the that's not a market thing.
No, but
it's just always hard.
But you know, it's an industry condition about it. So, you know, or what would be another one? You said oil and gas. That when you said that,
everybody loves oil and gas.
Tony for equipment.
Oil and gas for everything.
Stole the thunder.
Fix and flip, it matters, right? If that market starts going down, I'm sorry, a lot of fix and flip lenders are going to go bankrupt, and you're not going to be able to get those loans anymore. It's going to happen sometime in the next 2 or 3 years, or maybe now, right? It's coming. Factoring.
Factoring, is it a factor?
See, something about factoring just says, say my name funny.
Yeah, so this one I think was interesting. So they're looking at the conditions of your borrowers, their credit, and one of the ones that was interesting is I was working with a security company who wanted to factor its invoices, and Sears was listed, and this was maybe 6 months ago, and Sears was in the news that they were going to file.
But Sears is a big company. They're doing great.
Right, and so nobody wanted to lend them money because of Sears, and so that was a condition that impacted that. They couldn't get any money even though they had a lot of AR. Sears then filed bankruptcy, so kind of yes, kind of no. It depends on the people who owe you money and those overall market conditions.
All right, the market condition affects land. Land is the single most volatile type of real estate asset. When things are good, it gets real expensive. When things are bad, it's worth almost nothing because you can't sell it to save your life. So yes, land value is very important. It's super, super hard. You think it's hard to get a land loan now, try getting a land loan when things are dropping quickly. It ain't going to happen unless you go to a very specialized lender. Personal term loans. What do you think?
I'd say this is probably overall market conditions, but it's less important.
Yeah, right. The banks are making a ton of money off their personal term loans and credit cards. So when they're shutting down all the other programs, those are the ones that are still remaining. Personal term loans, you're going to get some more fluctuation than credit cards because there's a lot of innovation, a lot of new lenders there. Some of them are going to go bankrupt. So they're going to go away and the loans are going to get less. But the credit cards, they're like the cockroach that survives the apocalypse, right? During the worst of the last economic downturn, credit cards were hot. People were getting credit cards right and left. Maybe they're getting a little bit less, but they were still getting them, and I couldn't say that for a lot of other lending programs. So when things get really ugly, you can still get credit cards. All right, so that is it. Those are the 5 C's.
You skipped RBA.
Oh, RBA. All right. What have we? Okay.
Yeah, and I want to go into this one a little bit because the conditions that it's really important for the industry on this one. They want to see restaurants, companies that do deposits every day, or for the condition, the seasonality. Are you a seasonal business? Are you a snow plowing business? And is it November or is it April? Are you getting ready to go into your season? Or are you exiting it? Taxes. Like we did a Liberty tax or something like that. Is it January or is it May? And so that market condition would impact it with the industry. Also, some industries are just higher risk, and so inherently they're going to get less money, like a contracting or a construction company, just by the nature of that. Analyzing how that industry performs over time, they generally get 50 to 75% of their monthly gross revenues, whereas a restaurant can get 90 to 120% of their monthly revenues.
Okay, all right. Well, let me do a quick rapid fire to sum it all up. If you need money, you just got turned down for a loan from somewhere, all right, and you're worried about the 5 C's, BDRA doesn't give a heck about any of them. You could have bad credit, bad collateral, bad market conditions, bad everything. You can roll over your retirement funds, no problem. Business term loan, alternatively, is probably the one that is most affected by every single factor in general, as far as across all the factors. You got to have good conditions, good credit, good collateral, good cash flow, good whatever the other thing was. Real estate loans, all we really care about is the asset. If your credit is bad, if your cash flow is bad, if the market conditions are, that matters a little bit. Your character, whatever. All we care about is the asset. Equipment is affected by all the things just like term loans, but it's a lot more flexible. It's the Gumby of the funding program. You can do a lot of flexing. Fix and flip, it really is going to ride the market, depend on the asset, and everything matters. Factoring, a lot of things are kind of important. Are you going to give a summary on factoring super fast?
It's really important, your AR, how old is the AR, and who the people who are listed on that AR.
AR, accounts receivable,
right.
People who owe you money. Land loans really moves with the market. You don't need cash. The collateral needs to be really strong, and land's tough anyway. Personal term loans, they care about your credit, they care about your character, they care about your cash flow in the form of your paycheck. They don't really, and market conditions some. What was the other one? Every time I say 5, I forget one. Credit cards. Yeah, the capacity. Yeah, they don't care about that. And credit cards, all they care about is your credit and a little bit on the market conditions. So, if you're having problems, those are your options. Thank you for watching. Make sure to come back next week for the F word. Foreclosure sounds like a depressing topic, but it isn't, because while it's the downside, there's upsides, right? If you know somebody in foreclosure, we do bailout loans. Or if you're in foreclosure, here's the best way to deal with it. Or if you're a broker, you can go find people in foreclosure and we're going to help get them bailout loans. Or we could buy default notes. There's a lot of things we do in these situations that are interesting to know, and the more knowledge you have helps you close more deals. So, to wrap it all up, thanks everybody for coming on the show. Thank you, Rhoda P, for rocking it.
I drank
she
all
drank
mine.
hers for the one shot. All right. I'll see y'all next week. Happy Thanksgiving. If you liked the hats, like the dang show. Dang it. Subscribe. And make sure to put your questions for future shows in the show notes or in the description of the questions below. Thank you again, Loretta, for making this so awesome. See you on the flip side.
Awesome.